Hello traders, my name is Yaroslav and today we're going to go over things that you need to look for before opening a trade. Now, this is a simple system to follow, only 4 steps. And I mean, hey, we've all been there. We've all gone through the same steps of trading, and it's so easy to be overwhelmed by all the factors you need to keep in your head, like support and resistance levels, trend lines, price levels, price channels, different mechanics, different patterns. I mean, oh my goodness, it can really be overwhelming. But don't worry, we've got you covered. You can find a link to a video covering the best ways to draw support and resistance levels right above my head, right about now. You can watch that video first if you're just getting started, and if you want to brush up on the basics, and then follow it up with this video that you're watching now. Like I said, we have you covered today. To sort out some of the confusion, we recorded this video to give you a step-by-step guide to point you in the right direction. If you pay attention to the things I'm about to teach you, you basically can ignore everything else. And you'll see why I say this by the end of the video. So first of all, let's have a look at market structure. Guys, if you haven't already signed up to the channel, make sure to do so now. The first thing you want to pay attention to whenever you look at a chart pattern is the market structure, right? We always want to follow the path of least resistance. So if get out a pen and paper, hit that like button, and subscribe to the channel and write these things down, right? Number 1, market structure. Start by looking at the daily graph, like here what I have on my screen right now. We have Litecoin, for example, one of the cryptocurrencies that's been kind of following the general trend, but under pressure over the course of the entire year so far. All right. So if it's falling like we see here, you want to pick the best entry point, right? And the best entry point would be in a down trade. We're looking for down trades. With something like this where we have a nice range, you can be looking for both up and down trades, and you can see that quite clearly on the daily graph. Right? Let me show you some, so this would be an example of midterm kind of consolidation and long-term bearish trend. Let's go ahead and have a look at a bullish trend, what a bullish market would look like. So we have the likes of Brent, right? You guys know there's an energy crisis right now, and this is what a full-blown bearish market looks like, right? Or excuse me, bullish market that's bearish in the short term. So we're on the daily graph, but let's have a look at how the market started this incredible run. It was motivated. It was motivated by a fundamental factor. Like if we have a look back at 2020, this is when it became apparent going into the winter of 2020 that Europe was experiencing energy crisis. They were experiencing a gas shortage. They began, I believe it was at this time, burning coal. So it's a big issue that is apparent in the news space. So you can read news articles, you can read Bloomberg, you can read Reuters, and you'll see that, oh, Europe is going through an energy crisis. And those were the fundamental reasons for growing. But what do we have on the graph? What do we see in the market? Well, we have a series of higher highs, right? This was the low, this was the initial low, and then that low just kept getting increased and increased and increased. And that is the first sign that there's a shift in the trend. You want to be looking for a series of higher highs and higher lows for the trend to be considered a bullish trend. And that's what we have in the first week of November, right? November hit and there's a very distinct bullish run, and the lows, they kept getting higher and higher. And that was the first signal that this is a change. So market structure is what you want to be paying attention to. What are we walking into? So looking at the daily graph right now, what are we walking into? What is the market telling us? Well, there's a decrease of demand. That's the fundamental part, right? You may or may not know this, but we are dealing with a short-term bullish or excuse me, bearish trend. So now that the market is rarely easy to read, right? So what is going to happen right now? Most of the time, the market is going both ways, and bullish runs or bearish falls are followed by bullish runs, which are followed by market crashes. Like the best example we have is the likes of the S&P over the last 4 years with the coronavirus. It's been one heck of a ride, is what I can say. And you can easily see that on the daily graph, on the weekly graph, right? This last few years have really been, both ways. But when you look at an index, guys, this is one life hack that'll increase your trading. Whenever you look at an index over the long term, initially you want to be buying. Just the market essence of an index, right? The reason why it's there is to monitor the best performing stocks. That the 500 stocks that are in the S&P 500, they get interchanged in and out depending on the least performer. So whenever you think about buying or trading or investing in an index, obviously you always want to be positioning yourself up. Now, in the current market condition, what we're going through right now, and we've had a nice bull run. This is due to the earnings season concluding quite well. Companies are reporting earnings better than expectations. They're having, a mixed guidance, and the stock market is enjoying this optimism at the time of recording of this video. Anytime you're stuck, anytime you don't understand what's going on, all you need to do is go up one time frame. This is another life hack. You can write this down. So if we're looking at the 1 day time frame, let's jump up to the weekly time frame. And in one picture, this can show you what's going on. It's much more easy to understand that we were in a correction. We were in a massive market correction that we previously had, and now we're aggressively making new highs. It can shock the world to hear that the Federal Reserve would stop raising interest rates at this time. What do you think would happen to the stock market? It would skyrocket. And so while we're looking at the S&P 500, I usually use the daily graph most of the time. So like I said, we moved up to the weekly graph, and we have a graph that's more easier to understand that the market is in a long-term bullish trend. In fact, most US indices, it's not just the S&P 500. If we go here to indices, the NASDAQ is also similar, right? Long-term, massive bullish trend. And the best time to buy is after a market crash. If we have a look at this, the 50 SMA, we're trading much lower than the 50 SMA. When was another period where we saw this before? Trading much lower. And look at this, the breakout after the 50 period SMA gets broken to the top side is massive. Look at this, same thing from the bottom up. When we break the 50 SMA, massive. Best time to buy after a crash. So let's have another example of when moving up one time frame will help us understand. Let's have a look at Bitcoin. Cryptocurrency can seem confusing at this time, and say we're trading at the 1 day. Oh, perfect. Let's go ahead. So we're trading on the 7 day, and honestly, I'm confused. Looking at this graph, where are we going? We just made new lows. We're close to a level, but not yet. So we can expect a little bit more growth. Our indicators or our oscillators are not really showing us much bullish potential, but you can see that on the graph. So basically, it's confusing. Go ahead and increase the trend to the 1 month. Does this become a little bit more clear? Of course, it's an incredibly volatile asset, but it's about 100% better and bigger and more valuable than what it was in the first years of its existence, in the next few years of its existence. So Bitcoin is a bullish asset. If we're looking over the long term of the investment cycle, the boom and bust cycle, all we need is for this asset to show some growth. All we need is to show that there's a new market structure that is a series of higher highs, higher lows on the daily time frame, And there you have it. You may have a new trend that you can ride out that looks similar to this. Even if you caught the second wave, it was still good. Even the third wave, I would even say in the months of the start of this year, crypto was really good, and we had some positions in that as well. So finally, if you don't know the direction that the instrument is in, this is the last piece of advice. Just stay where you are. Stay flat. Stay out of the market. If you cannot understand the situation, don't make things up. Don't just buy for the sake of buying. I mean, stay out of that situation, right? It's a bad situation. You want to be active and waiting for the best setup and not take random setups or not random situations. So let's move on. Number 2, guys, write this down. Number 2, entry level. Now that we know all about market structure and we understood which way the market is likely to continue in, if we go back to, say, a US index, you want to be looking for an entry point, right? So number 2 is entry point, entry level. It's going to be easier to get right once you understand the logic, what behind an area of value is, right? What an area of value is. I'm going to write some of them out for you on a live graph of where it may be beneficial to buy the likes of the NASDAQ. Just going to refresh the window because it went a little dark for some reason. We're looking for the area that buyers are likely to step in. Sellers or buyers are likely to step in. So once we understand that, all right, in the longer term, this is a bullish area. So we're looking for buys. Where do we want to step in? Where do we want to step in? Well, one area, the closest one would definitely be right here, right? Let me make that green for you. So this would be the closest area where we would buy. Another really solid area that has a lot of potential would be this area here. And it was also previously where the 50 SMA hovered around for some while. If you can have a look at this here, you know, it's been here for quite a bit. And so we're looking for anything that can give us the indication that price has a high probability of continuing in that direction. It can be anything. Support and resistance levels, moving averages like I'm showing you here, price channels, something that we have with the Bollinger Bands indicator, but we also have an entirely different video on price channels, and I'll give you the link in a few minutes. Trend lines, anything. Let me show you the next few little entries, levels of entry. These 2 levels as support are a good level. I think any time that price would drop down to the 50 SMA would also be a good entry point to enter. If we were to draw, say, a trend line, which would be another good and solid area to enter from, because they're there for a reason. Trend lines are there for a reason, because price uses this level to jump off of and continue in the direction that it was going. So here's another level that you may want to buy from. If, say, price breaks below the 50 SMA, you may want to double down. So this would be a good level to double down. Keep in mind that there's also a level, and we're gonna discuss this, but there's also a reason to exit. If you hit up, if the logic behind your trade falls apart and price makes a new low in this regard below our trend line, we may start to consider closing. And there should be a solid level in your head, in your trading plan, where once price reaches it, you're out, right? It's very strict in that regard. You should not be losing more than what you have put in as the initial risk to reward ratio for yourself. So like I promised you guys, price channels really decided, we decided that it needed its own video. And so if you want to learn more about price channels, you can watch this new video from Olymp Trade. The link is right above my head in the upper left-hand corner. So moving on to the next lesson, number 3, what you want to be looking out for before opening a trade is the reason to enter. That's right, finally we came to that trigger. that trigger that we use to enter the trade, it can be on a time frame even lower. So we're looking at the daily time frame. We could even look at a time frame lower, like say the 1 hour or 4 hour graph. Now, these are my levels that I drew using a presentation program, but we have entry points that are now more apparent on the hourly graph, right? So it could be something as simple as a rejection pattern, or a hammer pattern, or a shooting star. So in our example, we're looking for hammer patterns. We're looking for when price has a retest and then gets rejected. That's what we're looking for when we're looking for a good entry point in this example for the NASDAQ going up. Now you may often wonder, and I know that this is an uptrend, but how do I get in on this trade? For example, we're looking at the NASDAQ right now. When is the best time? Well, at any pullback, right? In this example, it's easier if you think of whenever price hits a low, an ultimate low. So there's a few lows that we have here on the graph that you can clearly see. Let's go ahead and do this right here. Oops. So the first example would be right here when we're reaching down to the bottom Bollinger Bands line. And you can see this example a few times. So we have this here, here. If you're really bold, you could have entered here, but let's discount that. Also, another now that we're in a serious uptrend, another good level to enter from would be the retest of the 50 SMA that we use in this example. You can use it as a confirmation that we are at multiple areas of value, and before you get in on a trade, so you have a higher expectancy, more factors that help and aid in price going in the direction that you forecast that it will. Let's look at market structure some more. Let's have a look at another example, a series of higher highs, higher lows, say on Brent crude. Let's have a look at the current market situation. So we are on the hourly trend. All right, get rid of that trend line. That's what was bugging. So let's have a look at what we have. We have a series in a long term. So I don't understand what's going on right now. You can ask, help, what's going on right now? I don't understand this. So what we do is we move up one time frame. Have a look at the 4 hour time frame. And so you can kind of see and understand that we are in a short-term downtrend. Now, this doesn't look like a very opportune moment, but it does show you a reversal pattern of a level holding, right? When you have a really strong entry point like this into a level, the reversal is likely to be really strong as well. And you guys can use that in the future for your trading. Another thing that you can use to gather more information is oscillators. I have 2 oscillators on my screen right here, and you can use them exiting the oversold area, which would be right here, minus 100. To look for a buy position, but we already deducted that we're looking for sell positions, and so the best time to sell would have been right here at this level. And the oscillator confirms this. The price action shows that we're going to go lower. Another really good signal that you guys can use is a cross of the moving averages, which you can see right here. This is called a golden cross. Let me just make that a little bit smaller, you guys. Right here, this area is called the golden cross. Whenever we have a quicker period moving average crossing a slower period moving average, where in this case we have the Bollinger Bands 20 and the SMA 50, that is also a signal to sell, because right here you guys could have seen that, oops. Just this entire area right here, you can see that there's a lot of confusion, right? What's going on? What are we doing? Well, that would have been a good indication for you that, hey, a sell would be a good signal. So that would be a signal that you would take, some reason that you're looking for entry. So that's number 3, the reason to enter. So now that you understand the trigger, you understand the reason for opening the trade, the next thing you want to look out for is the exit, right? The exit if you're wrong, and the exit if you're right. This is where you ask yourself, did I click the like button? Did I click the subscribe button to the channel? if you haven't done so already, make sure that you become a part of this community, because that way you'll be on top of any kind of new videos, promotions, quests that we may have. A lot of things go on the YouTube channel. So, well, you always want to have an exit strategy, right? Whenever you enter a trade, number 4, the exit if you're right and if you're wrong. Always, always, always. You never want price to push against you without you having a clear understanding of when enough is enough. Do you understand? Of when I'm not willing to take any more risk, I'm not willing to take any more pain, I'm not willing to take any second chances, I'm done guessing. There's no more guessing involved when price passes that channel. This is the logic. It's very clear. At what level will my trade be invalidated, right? Let me show you an example of, say, let's have a look at this. This continues as a say head and shoulders pattern, right? Right. So we have something like this. This is clearly a head and shoulders pattern that we would have. Now, say if price instead of breaking down below this headline level, what if price did something like this? What do we have now? Well, that's not really, that's some mountains. It's not really a head and shoulders pattern anymore. And when price breaks out of a channel, it should not return back to the middle or below the middle of the channel, right? That would also be a very strange breakout if we're looking at this level as a channel, right? When would it be strange that we're breaking out, right? If price dropped below this middle line, if we had price come back in and do one of these, right? If price didn't respect this level but fell down, that would be definitely a breaking of the channel. And so you want to be aware of these levels. You want to be aware of what you're going to when you're going to get out ahead of time, right? Let's have a look at an example when we have a right triangle. This is something that you see very often. So in a way, this can actually suit our example really well. So if you guys can kind of see this formation of a flag pattern, here it is, getting progressively smaller. So this is what I mean by a flag pattern. And at what level would you get out? When would you say that enough is enough? Would you leave? So at this level where we currently are, at this bottom level, would you leave maybe somewhere around here? Or this level here, right? So prices, you're looking to buy. This flag pattern should break out to the top, and our entry point was confirmed. We have that big green candle. Where would you buy, right? A, B, or C? Where would your stop loss go? All right, let's pick it. 1, 2, 3, go quick. C, right? Correct. C would be where we're looking to exit the trade if we were looking for a buy. So, like I said, there's a few strategies that work, right? Capturing an impulse on the 1 hour, 1 day, riding a trend, using a trailing stop or moving your stop loss up manually. And what I mean by that is just once you're in the trade, once you are already are in the buy trade, you can use a stop loss feature that allows you to just move up your stop loss as if it's a horizontal level, just like so, using the next swing low as your exit point, as the level. If price comes back down to that level, it will exit. Now, I personally think that this method gets you the least amount of profit. If you use this kind of stop loss level, I recommend using price levels making new highs, using the fib retracement, or support and resistance levels that we recorded in a previous video for you, you can use those levels. So as price touches a higher point, then you get out of the trade. Of course, there's the possibility of losing, but again, if it's still in a good solid uptrend, you can always rebuy at those same levels that were initially used as stop losses or levels of support and resistance to the bottom. So support levels. I personally recommend thinking about when the opposite forces will step in. So when will buyers step in? When will sellers step in? Looking at those value areas will bring you the best results. And like I said, there's indicators that help you to see those areas of value. Again, nothing is foolproof, guys. Honestly, there's no market structure that can guarantee 100% compliance with what it's expected to do. For that reason, you have to be monitoring your trades. If the signal does not play out, guys, this is another little life hack. If the signal does not play out in the time frame that it's supposed to, there could be something wrong, and you may need to close that trade early. All right. So let's wrap things up. Conclusion. Let's put everything together that we learned and have a look at a few examples. Let's remember what you have to start with. 1, market structure. 2, entry level. 3, reason for opening the trade. And number 4, exiting the trade if you're right and if you're wrong. So we had a look at the S&P 500 already, had a look at Bitcoin, had a look at oil. Let's have a look at the likes of the Euro USD, the most popular financial instrument in the world. Let's have a look at, so we're on the 4-hour time frame. I can clearly see what's going on here, right? This is a channel that it's been trading in after it reached parity. I don't really understand where we're going in the long term, so I'm going to zoom out one level and have a look at the daily graph, and boom, whoa, doesn't that make it obvious? Doesn't that make it more simple? So we're looking for sells, and look, the sell came when price reached a critical level, right? This critical level of the 50 SMA and the top of the Bollinger Bands channel. It was also a level of support previously that became level of resistance. So there's a lot of clues that came together to form this really good signal to sell. Let's look at an entry point that we can have now. Where would we enter? So after a big kind of fall like this, I don't expect that it could continue much lower. So perhaps if price reaches this level of 102.60, 102 even maybe 50, 102.50 to 102.60 would be an excellent entry point. We can even drop down to a lower time frame to understand what the price structure would look like. The reason for entry would be that we're going really low. We have reached below the middle point of the average that the channel has been trading in, albeit that we did reach the higher level, right, with this level here. But the fact that it came down here, ooh, that would have picked up stop losses for any buyers. So any buyers that would have been in on this little market breakout to the top, right? This would have been the first kind of area of, uh-oh, something's going against me. This is when a very savvy trader would have gotten out. And then finally, this kind of break below this middle level is also another really big indication that we're going down. So hey, I would love to sell, right? We're looking for a selling opportunity. I love any kind of reversal. So if price comes back, let's see how it previously behaved when we're looking for a new low, like a new leg lower. All right, so we touch the top of the Bollinger Band indicator. Every time we touch the top of the Bollinger Band, there's a reversal. Every time we reverse up to the 50 SMA, there's a reversal. Let's see if we can have some other clues. So going down, when is like a solid time to buy or a solid time to sell? When we have the MACD making new levels to the downside. Just a few more examples so that we get really comfortable. I personally love it when the CCI indicator, that's this blue line you guys see down here, when it recovers or comes back from being oversold. This period, this entire period right here was massive, right? This period right here was massively overbought. Starting from here, this entire area massively overbought, and then we kind of had the breakdown, and there was multiple signals that we had. The first that we had was the breakdown of the CCI. The second was the cross of the moving averages that I taught you guys earlier, and then we recently touched and broke out through the top of the Bollinger Bands indicators. So this all came together to form a really good, solid, steady trend that lasted for several days. And that's what you want to be looking for in this profession of trading. It's really a game of patience and looking for the best setup. If you find that your stop loss, let me go ahead and go to the demo account just to show you guys what this looks like. If you find that you're making a $3,000 trade with a $500 multiplier and 500 times multiplier, and you're looking to put up your stop loss, so here I have my stop loss, and you see how it's incredibly close. It's incredibly, I don't even get a chance to let price reach this lower level. Well, what you want to be doing in this example is you want to be using a smaller multiplier, right? If I open up the same trade for $3,000, ooh, I wonder if I can make it. So here we have. Here we have our stop loss set up. Here we don't have our stop loss set up. So here we're choosing this trade, and we're looking to set up a stop loss. And look at how farther away it is with the 100 time multiplier. So this is another little life hack I want to leave you guys with is to give yourself that bigger room of safety, use a smaller multiplier. All right, that's it for today, folks. Thank you so much for watching. I hope you learned some new skills today that will bring you more profits in the future. It may be useful to write down all the steps in the video and then put them right by your monitor so that you can watch and use them like like a guidebook, like an official to-do list. And you can even use like an office sticker to put it on your monitor. Hit that like button, it's right under the video. Push the thumbs up and subscribe for more trading tips. Trading is a very rewarding profession. Very rewarding profession. I do believe that there is a lot of money to be made in the current market situation. Like I said, you need to learn a few setups before you really become proficient in trading. But we have you covered. There's a lot of material that you can check out on the Olymp Trade Global channel. You can find the links throughout the video and also below in the description. Yeah. Thank you guys so much for watching. I wish you guys good luck trading out there and see you all next time. Peace.